Hey everybody, this is Rob with goldsilverpros.com, and I wanted to bring you a very special message from our newest sponsor, that is Kinesis. And the reason we brought Kinesis on to be part of the program is because we fully believe in their mission. Their mission is to have a token that you can trade online that is backed by something of real value. That would be gold or silver. And they also offer a trading platform which allows you to trade through various cryptos and fiat currencies. The great thing about Kinesis is, for those of you that want to store gold or silver, but also have access to it and actually do transactions with it, they allow you to do that. So it's a better option than just flat out storing it and then having to fly somewhere and take it out when you need it. You have the ability to use it right on their platform. You can send it to other users. They have a debit card for US residents as well, and they have a full exchange, which enables the trading of Kinesis currencies for fiat and cryptocurrencies if you want to trade in and out. So lots of ways to get into the Kinesis tokens, the KAU and KAG, that are backed by the precious metals, and also to get out of them and to trade in other things if you want. So there's not this laborious process of getting your gold and silver out of the system. And again, they have a Visa card for US residents, and you can trade these currencies with other Kinesis users, the KAU and KAG, sorry. And so they also have a wallet. So it's a lot like having some of the other currencies you may be used to, cryptocurrency, except for the fact that it's backed. And that's why we wanted to have them on the program. I like the fact that this is backed with something that I trust, that has 6,000 years of monetary history, that is gold and silver, and something that also allows you to interact with the normal everyday financial system as well if you need to get your value in and out. A lot of benefits to using Kinesis. Wanted to share that with you guys. We're so happy to have them sponsoring the program. Look forward to more on Kinesis from us. We are going to do a special profile on Kinesis coming up during the month of June. Stay tuned to that. I'm going to walk through all the benefits of the Kinesis tokens versus other types of currencies, fiat and cryptocurrencies, and give you a full-on review of what I think about Kinesis and what I think the value add is. Stay tuned for that. There'll be a very special video coming up not too long from now. Hey everybody, this is Rob Keynes at goldsilverpros.com. We are here with a very special guest, my good friend, Steve Mueller, the dissident dentist. How are you doing today, Steve?
I'm doing really well. Thank you so much, Rob.
Thanks for joining the program. Everybody, Steve's a follower of ours, a website subscriber, been with us almost since the very beginning. We chat almost daily, I think, over Telegram and via email about lots of different investments and different things that we're interested in. And this will be our first fan video, but I wanted to put him on because I think he has awesome research. He has a really good understanding of the market, and I think he probably knows much more about uranium than I ever could in terms of potential investments. I just haven't been keeping up with it as well as him. So I wanted to bring him on to talk gold, silver, and uranium. So we're going to focus on uranium today. But before we do that, Steve, I want to get a little bit of your background, if you don't mind, and then tell us, why you had an interest in why you have an interest in gold and silver, and then let's get into uranium right after that.
Yeah, so I've always just wanted to enjoy helping people, and through healthcare specifically, and that kind of became a business. And then a couple of years ago, I had a financial advisor I hired tell me that I wasn't going to be able to reach retirement because it just wasn't paying enough. And so, I fired him and I started taking over my own financial investments. And I'd studied Thomas Sewell and a lot of the Milton Friedman, von Mises, a lot of the economists that you also are a big fan of growing up. So, huge thank you to my parents. But it just got to where it was really important, especially with this latest lockdown. My healthcare business, was gutted. We, unconstitutional shutdown, whatever you want to call it. I was not able to work, not because I wasn't healthy, not because my patients didn't want my services, not because, it was dangerous. We were very clean. But anyway, all I could really do was read about investing. So I spent a lot of time during the lockdown reading about investing, and Gold and silver primarily, and I think that should still be the bulk of most people's investments. It's definitely the bulk of mine. But I think investments should also be a vote for the world you want to see.
Mhm.
And I think we need a lot of energy if we're going to continue to improve the quality of life for the race. And as the global population increases, and as we continue to electrify,
Mhm.
and especially in the developing world, which I've traveled to many countries to do charitable work, and so pretty good understanding a lot of those places. But anyway, um, uranium basically is a wonderful investment, both for what it does, but also what it can do for the investor. And
Mhm.
so I think it's a nice diversification out of just something that can be manipulated by the COMEX. So.
That's right. We know all too much about that with the gold and silver. And I agree with you, making gold and silver a big part of your portfolio. But as I've said on our program a bunch of times, sometimes you have to diversify a little bit away from that to take advantage of market movements. I think for me, gold and silver isn't a big mega trend, a societal trend based upon what we see in the economy. But in the meantime, while we wait for all of that to play out, which seems like they keep extending and extending, I always advocate doing some speculation if you want. That's always been, my thing. So I speculate in mining stocks, and I may speculate some in numismatic coins. Those are my chosen ones. I think you and I first started talking about uranium a couple of months ago. It started to get interesting. I know uranium was in an oversupply situation for a long time, and they've been talking about it at conferences, popular conferences I went to for a couple of years, but uranium price had never popped. It was sitting below its cost to mine. And what happened was there was a loss of supply destruction. The miners started shutting things down, and we may be getting to the point at which we're actually in a supply deficit. And it looks like some of the bull factors for uranium may be getting a lot stronger. And so it's perfect timing to have you come on. I know you've done just an absolute huge amount of research here, and I wanted to have you come on and share it with our subscribers if they have an interest in getting into uranium also.
Yeah, and I hope it's helpful, just because I am a retailer. I'm not selling you a company that I run. I'm not a CEO of a uranium company, or I'm not. I don't have a newsletter.
Right.
For uranium. So anyway, yeah, I hope it's helpful. But I think there's a lot of upside here, and I hope you can use it to buy food for your family, to buy more silver bars off the PSLV or wherever, coins, numismatic coins for yourself.
Sure.
Yeah.
Well, I'm going to jump into your presentation here real quick,
good.
and I think you have a disclaimer, so we'll share that first. So we'll just leave that up screen. Why don't you get started on? I think you've already talked about who you are and what your thoughts are, but before we get into uranium, did you have any other thoughts on the economy or the energy part of the economy that you wanted to share before we get into this?
Yeah, so oil, growing up in Oklahoma, very familiar with boom and bust markets and commodity cycles, right? And trying to outguess and outfox OPEC and $100 trillion market cap. Any retailer, is probably not going to get lucky. I'm probably not going to move the market. So anyway, I've kind of stayed away from that. I mean, I understand oil very well, but it's a pretty large ocean with lots of big dangerous sharks. So I wasn't going to swim there. So
yeah, I gotcha. So let's get into it. So I think you have a chart here on the Federal Reserve.
Yeah, we got it shut off for their computers during this last hack.
Yeah, it looks like how they would have put it, right?
Yeah, because they can't change the funds rate anymore.
No,
they can really only print or reverse.
Well, I mean, they could change the rate, but what do you think would happen if they did that?
Well, and that's the thing is, like, I think it's just 0.25% that they raise. Yeah. Now the cost of interest would be more than the annual budget of the Navy.
Wow.
I mean, it's astounding. I think they get away with it simply because the numbers are so large, they're not comprehensible to the public.
That's exactly what I was going to say. Somebody else that I follow who has a newsletter does a Giza Death Star. I don't know if you're familiar with him, but he talks a lot about math. And there's this concept of math that once you get to a certain number size, one, humans can't really understand it. And two, it doesn't follow the normal dynamics of math as we know it. So for example, 2 + 2 may equal 4, but 2 quadrillion + 2 quadrillion may not equal 4 quadrillion. It's not linear. And as math gets to a bigger scale, it tends not to respond to the existing formulas and knowledge that we have. And we may be getting to that point in the monetary system where there's so much money out there that the Fed has lost control without realizing it, because whatever they're trying to do doesn't work anymore. The math is so big that they can't prescribe anything, and we don't necessarily know what the next step is going to be and what's going to happen. And I think there's something to that, and I think the numbers have gotten big. And I know Biden the administration is trying to put out $6 trillion, $6 trillion budget this year. What do you think that's going to do to the deficits?
Well, on balance liabilities, I think we'll probably pass 30 pretty quick. Off balance liabilities, I think we're well past 220 now. I think I don't think most people track that number, and they should. It's just none of it's tenable, and none of it are they really actually reporting correctly, right?
Of course, they've gone dark with FASB 56. They're nothing that they report. And they could report 6 trillion, and maybe it's 100 trillion. I mean, we really don't know.
Yeah, we don't know. But the things that we can track, it's pretty alarming. On any input, supply cost, wages, being a small business owner and being just running a household, it's pretty sobering. But I think one, I won't give advice, but something that's helped me this last year is to denominate everything in everything else, right? So the gold silver ratio, I know all my fellow gold silver pros would know, right? But denominating everything in barrel of oil, pounds of beef, gold versus lumber, car versus ounces of silver, doing those things. It sounds really zany, and it takes 10 minutes of math, but it really is going to give you a leg up, just as everybody's drowning in inflation. I mean, every time I go to the pharmacy store, the convenience store, supermarket, every day at work, we have people be like, I can't afford that, or this coupon's not working, or it's not enough. And, and yet I've had 3 employees lost this quarter because enhanced unemployment or it doesn't make sense for them, so.
Yeah, I definitely understand running a small business, how sensitive we are to cost increases. We are wanting to expand our team beyond where it's at right now, but we're holding off just to see where prices are going to go. And it's gotten to the point of where costs are rising so fast, it's so blatantly obvious. I don't think they pay attention to the government numbers anymore. I don't know anybody who looks at the CPI of 2.1 or whatever it's at now and says, yeah, that makes sense. That's what I'm seeing at the grocery store.
Yeah, no.
I don't know anybody who's priced a new house. I have a friend who is I was on his radio show Sunday night. I was on the radio show, and he was talking about moving from Michigan to the East Coast. And he's like, I can't afford anything. The rents are too high, the houses are too high, and I don't actually know where we're going to live because they're just unaffordable to people. And I don't know if how many people in our audience have tried to price a new vehicle recently, but I remember when you could get a vehicle, you could almost buy a vehicle in cash, or you would take a loan, but you'd very quickly pay it off. Now I'm looking at vehicle prices going, I'm just going to keep my used one. And we have means to buy new. I just don't want to. They're so expensive. I'd just rather drive my old one around for another couple of years.
Mine's 10 years old and it's still going. So
yeah. Why get rid of it at this point, right?
Yeah, I think a lot of these asset bubbles, and we are in a pretty much everything bubble. And I talk to friends outside of our community about investing and speculating and such, and they're like, I can't find any value, and everything's hockey sticking, and I feel like I'm FOMOing, into something, and so this is something I hope. Yes, it has gone up, but I want to go over for our fellow gold silver pros, because I think the train hasn't left the station yet, and it's going to help them. So
yeah, hyperinflation is something that's very scary, but like you said, we hockey sticked in 2020, and the excuse was the pandemic, but I wonder if they use that as a cover because they needed to print anyway.
They started printing in August of 19 because of the repo crisis, right? We had
That's true.
The beginnings of a liquidity freeze. And when I heard that, I was like, what's, that didn't sound right. That didn't, like we didn't have a hedge fund collapse like we did in the late 2000s. And so I was just like, that's not right. So anyway, but yeah, George Gammon talks about how we went from the value, the number of marks that it took to buy a newspaper, just a few months later, 13 months later-ish, were, I think all the marks that existed 13 months before or something. Like, it's hard to, to simply just put how many, it's just non-comprehensible, right? And we have this because a lot of other central banks are doing that, right? But it is a tail risk now. Before, it was just kind of something that, oh, that happened 100 years ago in Germany. That was weird, And now maybe we just see really painful disinflation that's, like the 70s, but way worse. I don't know. But
do you think this could happen all over the world this time, given that none of us are backing it with gold and we've all sort of gone nuts? Since the U.S. started in 1971, everybody's printing currency to oblivion. Do you think it's not just going to be a single country? Do you think it could spread through most major economies?
Yeah, so there's a chance that the free market forces it on us. And there's also a chance that China and Russia, being completely gold backed, and we're not, they could force it on us. And so, I'm not.
Did you hear Putin say that they were threatening for the Russian and the Chinese currencies to go on gold backing, and that's why Basel III
implemented by the BIS?
Yeah.
And we had heard that from friends at the, I can't say where, but Department of Defense. How about that?
Sure. Well, for those watching, Steve is very well connected, so let's just leave it that way.
Well, no, I chat a lot, and I try to sift through what's rumor, what's not. But all the conspiracy threads that got made fun of for the last 10 years, the last couple of months have been astonishingly proved right. And it's sad. But,
when I wrote the book in 2009 and published it in 2010, I think a lot of my friends weren't, they were aware of the financial crisis, of course, it had affected all of us. But a lot of my friends really weren't aware of how the system actually worked. And when they read the book, it's like you could see their eyes get wide, and I'd woken them up for just a moment, but a lot of them decided to go back to sleep. It's kind of like you open the door, you see the monster, you close the door and pretend the monster's not there. And now it's almost like part of everyday conversation. I'm out here in Virginia doing some business, and I can walk into a bar of a restaurant. I go to a couple of different places like Buffalo Wild Wings or whatever, right down the street from a hotel. And I walk in and you hear people talking about it. They're like, I don't know what I'm going to do. The economy's so bad. I don't trust, blah, blah, blah. I don't like these people, they're always spending money. I can't afford anything anymore. How do we protect ourselves? It's become part of the public consciousness, I think. For the first time since I started writing about it, I feel as though the public is starting to wake up a little bit. And I'm just hoping it's not too late. And I hope part of this conversation really can help people prepare for that.
I think it will. I think it will, because I think people that were open to sound money are also very open to value, and then kind of understand maybe how to do a net present value calculation and the power of that, and whether or not the stock price goes up or down during a stock market crash, it's going to come back really strong just because of the cash flow. So
yeah, here's the M1 money stock, which you put in here. One of my favorite charts, because you can see the literal hockey stick that you're talking about before right here.
Well, and then they quit reporting it. Like, it's worse now.
Yeah. And you know what I think? Going back to the repo crisis, I called that on Lynette Zhang's show. So I went on Lynette Zhang's the end of 2018. I didn't say repo crisis, but I said we're going to have a liquidity, a cash crisis.
Right. Yeah.
And that happened in the repo market September the following year. And I think nobody predicted it because there's so much money in the system that's not being reported on this chart.
Right.
It's never been on any of their charts due to FASB 56 and other things, that there's so much, and debt, by the way, so much debt in the system that people didn't see it coming because they're going off of the government published numbers, and you wouldn't have known because we hadn't got to the point. We hadn't got to this hockey stick point yet. We were somewhere in here. So people are assuming, oh, we've still got time. And I think this hockey stick chart probably is a more accurate representation of what was actually out there at the time, but they just weren't reporting it. And I think the pandemic was a way for them to then start reporting what had already started to occur, behind closed doors. And so now looking back, the repo crisis was a foreshadowing event, telling us but also telling us that the government hadn't been honest with us, up until that point.
Yeah. And then, if you go into the euro dollar market and some of those other things, it's just in the derivative markets and how much is stacked on so much. And if those fail, great, a lot of money goes to money heaven, but or debt, either way, however you want to look at it. But and that's deflationary, but it is so large, even if some of it comes back into the market, you got a hockey stick on a hockey stick. I mean, there's simply not a graph big enough. But back to uranium. Sorry.
No, we'll get to uranium here in a second. One more thing I wanted to say: it is deflationary. And some people in an aggregate sense say, well, that wouldn't be too bad. Wouldn't that be destroying, the inflation? But the problem is those deflationary assets sit in pension funds. They sit in 401ks. So it'd be a huge destruction of people's savings.
Absolutely.
And that's one of the reasons I wanted to bring you on, is because we have some alternate ideas about how people can play around in the market without getting into some of these vehicles that may destroy their wealth. So let's without further ado, let's get into the uranium market. So this is uranium, the bull market of inevitability and necessity. I'm just going to let you talk through this. So let me know when you want me to change through slides.
Yeah. So I think most of anybody that loves gold and silver also is aware that we're probably going to be in a commodity super cycle. And it probably is going to eclipse the one that was kind of interrupted by the global financial crisis. And it's probably going to eclipse the one that we saw in the 70s. And it might even eclipse the one that we saw in the 20s and 30s. I think it will, because I think we've been financialized and globalized more than ever. I don't think we've planned well for food or broad industrial commodities.
No.
Or energy. I think energy may be the worst, but we'll see. So.
All right. So here we go.
I tracked some of the. I didn't want to suffer from recency bias, and I don't have good numbers for the 30s or before. So I went to the 70s and I pulled some of the big commodities. And I think everybody has seen rhodium go ballistic and kind of track inflation better than most, and is a little jealous. And I sure hope gold and silver hold the debt accountable and follow rhodium. I think oil will at some point. I don't know what that's going to look like, and I don't know how to play that well, because it's already $100 trillion market, right?
Sure.
And I think a lot of the great oil plays are privately owned by OPEC, right? Like, I don't know. You and I have access to this. Copper, I think, is going to be a very, very long bull market, but I don't know that it's going to be the fastest or the furthest. And I'm going to condense a lot of research as fast as I can. But the uranium, though, because of the market cap, and because of its critical need, and because of how bad it is compared to prior bull markets, how low, I think it's got a lot of legs, and I think it's going to move very quickly and shock a lot of people. If you adjust for inflation, it would be at $200 ish, at least 150, depending on which bull market you picked. And if you adjust for M2, it's going to be higher. So is triple digits overly bullish? I do not believe so. And I know everybody loves you, especially your show, because you don't bring people on to be wildly bullish and sensational. And so I don't want to be the first. but I'm just looking at the numbers, and $40 uranium is not going to do, and it has to go at least 70, 75.
Yeah, just for them to make their money back on.
Restart and bring enough to market. Otherwise, and let's go ahead and look at the next slide, because I think I've gone to Trader Ferg. Yeah, we've watched supply destruction across a whole bunch of commodities. So which one do you want to play? Well, I want to play a lot of them, but which one do you want to concentrate in? I think silver is the best, but I think uranium's second best, and I think it's the one you're going to want.
Okay.
And I think because of where we are today, in its own bull market, we're earlier innings in silver. I think it's kind of like buying $13 silver. And I think if you're buying a lot of these stocks, you're kind of buying $2 Silver Crest or $5 First Majestic. So you should buy it.
Sure.
You should at least do your homework and say, man, that guy was really wrong. Or you should look at it and say, oh, I can't find a bear case either. They have to go up.
Yeah, the disclaimer we should put in the video is please do your own research. Please don't trade off anything we tell you.
This was all because I kept trying to find a bear case.
Yeah.
I spent so many hours. I mean, silver, you can find a bear case, but at the same time, like, eventually the manipulation is going to end, right? And eventually the investment demand is going to cause an industrial short squeeze. Now, we don't know when. And I think uranium's more predictable. And so that's why I'd encourage fellow pros to take a good hard look at it and maybe put a little in it. So. All
right. You want me to keep going?
Yeah. So market cap. Go back one. Sorry. Market cap is only about 27 billion. Okay. But it's 11% of global baseload power and a little over 20% of United States baseload. Which is fantastic. I mean, like that really is. I mean, like I said, oil's a couple hundred trillion, a little over 100 trillion. And it should be. I mean, oil's incredibly useful. But we've been putting trillions of dollars into green energy from wind and solar and getting very little from it. As Texas and California have recently painfully found out this last winter, right? I mean, that was embarrassing. Germany's going to find out soon, and that's going to be painful to watch as well. But we had the last bull market, we had about 1,000 companies. 500 were, somewhat legit. And now, it dropped to 40 in the depths of the bear market. Now there's only 67. So doing due diligence is super easy. I mean, there's not much to read. You can go through all their quarterly reports pretty quickly. You can go through their investor presentations, corporate presentations pretty quickly. You can go and find, there's only a handful of analysts that, that follow it. And so, going through their notes and comparing and contrasting, it's not going to take you but a weekend or two, I mean, I've spent way more than that, but just to where you're, are comfortable yourself. But so we've got 440 reactors, and they're providing an immense amount of electricity. We've got 56 more under construction. They're all bigger per size.
So where are these going under construction? Because when you look at uranium, the bears will tell you Europe doesn't want it. Look at Fukushima in Japan. So who's buying these reactors? Who's starting them?
Japan's restarting theirs. America had thought about canceling some of theirs and is rethinking because of I think the bloom is off the rose a little bit with solar and wind.
Of course.
Yeah, not not that we don't want to be green, but just that it's not as reliable and as effective as we'd hoped.
Well, you saw what happened in the shutdowns in Texas. I live in Texas. I had to deal with being out of power for a couple of days, and the wind turbines had frozen. Solar wasn't doing great because you had nice dark gray skies. So just those types of situations, it's almost as if you're going to put solar and wind, you still have to build capacity through more conventional means.
And that means
or when solar and wind either freeze up or stop working.
Right. Yeah. You can have a quick fire coal plant or a giant diesel electric generator, or you can have nuclear. Well, yeah. So, and there's 325 proposed and another 100 ordered. But these reactors are so expensive to build that you can't not feed them. You can't just
You can't just you don't hit the off switch, right?
Right. Yeah. So anyway, next slide.
Do you real quickly? Aren't they talking about doing smaller nuclear reactors? And if so, has your research told you that they're
tailwind?
Sorry.
That's a huge tailwind. It will be. It's going to be a while. But I think Wyoming will get some. I think a lot of the First Nations in Canada, or we would say American Indians or Native Americans here, right? But a lot of developing countries, a lot of remote places where they don't have a lot of infrastructure. A lot of Africa is talking about it. I think we'll see a lot of those in the future. But that's decades out. But that's going to be a sustained tailwind for. I think it's going to make the bull market last a lot longer. But
this
I'm not
chart
on that.
Okay, this chart that you have up here is a chart that I saw when I was a kid, and then all of a sudden it disappeared when I started to get older because people were demonizing nuclear energy. But one uranium pellet equals all of these things in fossil fuels. And I actually have one of those plastic pellets that they gave you in school when they were promoting it.
Right.
And now they don't do that anymore. Uranium is the devil, I think.
Well, that's just goes to, I think the narrative was so powerfully against it. And I don't know if that was big oil or what, I don't know who was against it, but it forced it into a bear market as long as possible, and now it's not possible anymore. And now they're coming out for it, and so it's going to be a large tailwind, which we'll talk about. But yeah, go ahead. Let's go next.
All right, next one.
So yeah, to put it in a different context that's usable, giant container ship, went about 500,000 miles on just a couple pounds of uranium, and that been the old. They use that real sticky tar kind of oil, right? And would have needed 29 million gallons, which is a lot. I mean, that takes a lot of room, and that makes a lot of black smoke. So
lots of pollution.
Yeah. So you ask who's building. China's leading, and I think that's very smart. And I also think they can't not. And I think they're going to try to outpace 16 pretty soon. They're adding 2. Their 5-year plans are incredibly bullish for uranium, but India is. Korea and Russia are. There's some and there's a lot proposed in other places, but as far as like building today, this is where we're at. So,
okay.
And this is from USDOE. So here's where I say they're overbought for where spot price is. Yes, they're not cheap. And this is early May. I think it's like 23.5-ish today. Yeah. But if we go back to the height of the bull market last time, it was 130-ish, a little over. Spiked up, I think, to 140. But if you adjust for inflation, that's 170-ish. So, most of these things, if you just bought the ETF, you probably have a 5x.
Sure.
Maybe a 6. Not that anybody can nail the top, and I wouldn't encourage trying necessarily, but you definitely have a lot of meat on the bone here. And I think this goes to the Pareto principle, right? Like the 80% from the 20%. This is the last little bit of the time. It's queued up. And I think this is a great spot because it's not a fake breakout, but there's still the majority of the move to come. And so we're in the sweet spot of the bull move.
I would 100% agree with that. I think they're, because of this supply destruction and the need for additional energy, that's all going to it's like it's all going to come at once. And then, of course, you're going to have the normal commodity price inflation, which is going to affect this chart as well. All the dollars printed we talked about at the beginning of the presentation is going to affect that as well. So you're going to capture some of the inflation in these prices, which will be reflected in the various stocks in this ETF that you have listed here.
Yeah, and that's one of the big ones. It's not one I recommend buying, but we can talk about recommended buys in a different video, a different day.
Okay.
I don't want to run you too long.
No problem. All right, so we have, this is spot U308.
Yeah, so as people get interested in the stocks and you look at the market caps of the general equities and the ETFs and such, the fund flows, spot price generally tracks it. There's a strong correlation there. And I think we pulled this, I think this is first of May. And so,
so what are we comparing here? What are the two lines? Just for people who aren't familiar.
Right, I'm sorry. So we're looking at spot price, which is, I think now at 32, but in this chart, it's high 31, and that's the orange line. Then the fund flows into the ETFs, into the equities, and into the participation corps, all those. So money comes into the sector is not usually too far ahead of spot price. But right now it's pretty far ahead. There's a disconnect. And so I expect a snap rally in spot price. And then I guess to say the narrative doesn't get away from the fundamentals too much. And right now the narrative is ahead. It is. But I think that's because a lot of people have done their homework and are wanting to be positioned for the bull market for the next couple months and years. And so,
yeah, I do think people have been preparing for this bull market for a long time.
Right. And I think there was a fake breakout in 2017, right? And I was ready to buy then, but I don't know. I didn't see spot move, and Japan hadn't restarted, and anyway, there wasn't enough to convince me that it is there, right? So, but there's nothing to convince me that we can't not move now. So yeah.
All right.
So
uranium
can we actually squeeze uranium like we are squeezing silver? And the answer is a resounding yes. And let's go through that.
Okay.
Yeah. So our friends at Incrementum, thank you.
Dogecoin.
So Dogecoin actually, I think, got above 70, which is insane because you have wonderful companies like Newmont and Barrick that bring a lot of good metals to the market, and they're small, right? Now, here's the crazier thing, and I didn't want to ruin their report, but the entire uranium market, all of it, is under 27 billion. So if just a few FOMO buyers from Wall Street bets or retail or the Robin Hoodlums come in and decide to bid on some uranium, there's not enough space for it. And so if you position now, the gains are going to be pretty enjoyable. Yeah.
And I think that will happen. I think the speculators will eventually, they're going to catch wind of the story and they're going to drive it up. And it's funny in the age of activist investing, where people on a Reddit channel can change the fortunes of one of these things. I agree with you. That's more so probably than ever in history.
Yeah. So there's in the space, famous investor, Kevin Bambro, former President Sprott. And he started Uranium Participation Corp, 13 years ago-ish, a little more, maybe. And he had some numbers, and I want to give him credit. Is the cost of uranium for these companies, it's a fraction of a cent per kilowatt hour, right? So they're price insensitive, and I can't name anywhere else that has price insensitive buyers, right? I mean, if food goes up too much, you're gonna have to literally tighten your belt, And anyway, I think we're going to be able to bid up. He thinks they're going to be able to bid up to 150, 200. I think he is correct, and I think it could go higher, simply because anybody that doesn't know the space isn't going to buy maybe the best equities. They're just going to buy the ETFs, because that's going to be more broadly available. Because I mean, not too many people buy on the Australian exchanges like you and I do, or the Canadian Venture Exchange like you and I do. Most people are going to just, hey, what can I buy with my retirement account? What can I buy on the American Exchange? Or what can I buy on Robinhood? They're going to buy the ETF. Maybe they buy Cameco or Denison, one of the ones on the American Exchange, but they're going to buy the ETF. And the ETF is going to buy a little of all those uranium companies, but it's also going to buy some of the physical, like the uranium trusts, whether it's Yellowcake or Uranium Participation Corp. And with that, more uranium is going to be bought off the spot market and away from the term market. And that's going to force the utilities to pay more. So,
yeah.
He said it's going to be like Pac-Man, gobble, gobble, munch, munch.
Yeah.
So I think it's important to look at what the physical investment funds are able to do. A hedge fund bought quite a bit last time, or a couple hedge funds did, and UPC bought quite a bit. And they got very nice returns. I mean, just for buying the physical, most of them got 3, 4, 5 baggers. And they didn't buy very much. I mean, this is very little uranium that they bought. I mean, a couple million pounds. I mean, they only spent, I don't even think they spent 20 billion to buy it all. I did the math once, and it was very little. I don't even think they spent $1 billion total, maybe. It was very little.
Yeah.
And when I saw that, and then I saw how, sorry about that.
It's okay.
Saw how, how much Dogecoin has moved, or how much AMC or GameStop had moved. I mean, did AMC get up to 175? I
don't remember. They got up really high, and at some point I stopped tracking it. I thought, okay, this is ridiculous. It's just people chasing momentum, the Momo stuff. But I mean, that's exactly what we could see in uranium, right? You could see the momentum. And the Momo traders chasing it, and it could just continue to bid it up. And what you were talking about on the last slide and on this slide is somebody big, like somebody former Sprott coming in and buying it up, maybe some of these people buying it up. And that in itself is going to create, a higher price situation. But what happens when the public finds out, and then somebody organizes on Reddit or someplace like that, and they they're not going to buy the physical, but maybe they could go buy the ETFs and the stock funds. I think it's going to add to it, and they're going to pick one. They're going to say, go bid up all 5 of these. They're going to say the one that they like, they're going to point at and say, go buy this one. And whatever that one is, it's going to launch, and it's going to go.
Yeah. And I think something to watch will be Wall Street Silver just got to 100,000, right?
Oh, yes.
You get on them. They've done a wonderful job educating people. The more people that are open to sound money and to the silver story, the better. But the uranium squeeze is only like at 6,500, 7,000.
So we talk about owning physical assets all the time. Mostly I'm gold, silver with some farmland and then some other speculative investments. Uranium is a physical asset that you need, and the energy industry is not. I mean, it's obviously not going away.
Right.
And as India and China industrialize, they're going to use a lot more of it. So this is probably one of the safest thing, uranium being one of the, oil and natural gas also being some of the safest investments outside of the physical gold, silver, and farmland that we could get into. So it's definitely, a lot of people may be looking at this as, it's very speculative, but I don't think it is personally. That's why I've been following it for several years. I don't think uranium is speculative at all. And the failure to reach the intended milestones for like Europe, for example, for the green energies is going to lead them back into uranium. And I think the snapback after all the negativity on uranium for 8, 9, 10 years, the snapback is going to pull this market up really fast.
It is. And, it's nice to say you want to be ESG, and a lot of money is going to that. But eventually investors are going to want to return, and eventually citizens are going to want some sort of benefit from all these dollars being spent. And I think I think when people see the numbers of wind and solar, they're not going to be impressed. I know that Texas is over it.
Yeah.
But I think that's happening more and more. And I think once they see the numbers from uranium in comparison, and just how stable it is, how safe and green it is, and from an investment standpoint, how profitable it is, it's going to be quite the bull market. Now, like I said, not much money went into it last time. And when Bambro started UPC with Eric Sprott and Rick Rule in 2005, they had an immediate impact. And they were definitely part of that run up too, because right after that, the other one started. And so they took it, from 20 to just shy of 30. And then that was enough to convince other hedge funds to join in. And then it went up to, 130-ish, 135.
Yeah,
more
it's like 135-ish. Yeah.
Yeah. So in very short order. Now the market is thinner. They didn't have a supply deficit at the time, like we do now. And so the market is much, much thinner.
Yep.
So I think it's going to be much more explosive. So to talk about retailers and just the influence that I think they're going to have this time, which is going to be novel, it's picking up. And this is the latest data I had. It was late May, but recording on D-Day, right?
Yep, June 7th. So it looks like the trend has picked up. You got some nice trend lines in here. Not only has it picked up, but you can see some spiking there in May as well. Lots of clean spikes up here, which says you've got, if we're charting, you say, well, you've got a nice little flag pattern here. Here's the low, here's the high, and upward flag is a bullish for talk, meaning we're probably going to get more and more talk as things get going.
Yeah, you get a network effect for sure.
Yeah.
For sure.
Very good. All right, last slide, bull drivers and tailwinds. And then I want to chat with you about risks when we're done with this one.
Yeah, and there are risks, and I'd love to go through with those.
Okay.
So like I said, we're the macro picture, as you've established on most every show you have, it's pretty bullish for commodities, especially real ones that bring real utility, right? And I think investment wise, I think we could be in a crack up boom, right?
Yes.
We're definitely in an asset bubble, or a series of asset bubbles, and I think eventually people are going to come back to rotate into value and cash flow, and so that's going to be amazing for gold and silver, and commodities like copper, and oil. But it's going to be amazing. It's going to be hard to fathom how good it is for uranium. We talked a little bit about how the developing world wants electricity like we do. China.
So you got the Belt and Road Initiative here, which is connecting, I think, 73% of the world, either sea routes or land routes. And all of that development's going to need energy, right? Because you're going to have more goods and services traded. Whenever you have goods and services, that means economic opportunity for people. It means developing businesses. That means higher standards of living, and of course means more energy usage along the way. Now,
something that I think China has learned is they saw that the Germans weren't able to conquer everything they could have conquered because they were oil constrained, right, in World War II. And they saw that we weren't able to succeed as well as we wanted to because we were also oil constrained. They don't want to do that. And they've been taking a lot of steps to buy significant portions of uranium companies.
Yes.
Most of them. And to also put most of them, if they can't buy them, they put them under long-term contracts. So and that could probably be a whole video in itself, what China is doing in the space, but China alone could drive the bull market. They don't need us. They don't need, but it's going to be crazy.
Yeah, that is another video about China, but they do have a grand master plan, and you can see it start coming together economically, politically, so on and so forth. And China's been really good about segregating those out to try to keep people unaware of their plans. But when you see China involved in everything, you start to put the pieces together that they're very smart. They're playing for the long term. They definitely want to dominate, the world economy, and even maybe politically going forward. So uranium would have to be a key there because it is the most dense form of energy we currently have, unless you want to get in speculative things like 0 point and Teslas. infinite energy. But in terms of known sources of energy, uranium's really going to play a key role here.
Yeah, well, and you know, any production of any commodity that is fragile, right? That only comes from a few places.
Yeah.
If something goes wrong in one of those places, like in the last bull market, it really spiked up higher. It went from high to crazy high because a mine in Canada flooded. Right.
Yes. Wasn't that Cameco's?
Yeah, it was. Because they're drilling underwater, right? So under a lake.
Yeah, Cameco's back online now, isn't it? That mine out there.
One of them. Yeah. One or two is online. But you know, during the bear market, they had to tighten the belt so much they sold all their exploration assets and fired all their exploration geologists. And most of them went to Alaska, and some went to UEX. But you know, they don't have a whole lot in the pipeline, so they're going to be buying. And so, anyway, you know, it's going to be an interesting bull market to watch, and a lot of different ways to invest. And I'd say probably put a little in each. But we can talk about that at some point. So
any investment thesis is not complete unless you talk risks and competitors.
Sure.
So overall, in terms of fossil fuels, renewable energies, are they a competitor to uranium? I think we made the case that they're probably not, but if you could summarize that, what your view is on that.
Yeah, you know, if we had something worse than a Fukushima, and we had the political will to get rid of it, I think it could delay it for several countries. I don't think China and India would cancel it. I don't think Russia would cancel it. You could say several nations that are more open to the political whims of their citizens, right? The Western world mostly. They're going to be willing to maybe cancel uranium, and that might prolong the bear market for another year or two. But with China's plans, with Russia's plans, they've just put too much into it.
Yeah,
I don't think that there's a permanent risk with an accident. Now, is there a miraculous, like you said, 0 point energy or thorium or one of these, you know, infinite energy pulled out of a third dimensional phase, or, you know, I don't know, some sci-fi stuff. Is there a sci-fi risk? Yeah, sure, there's a sci-fi risk, and so I'm not putting 100% in it. I'm still mostly silver. But
well, let's talk about thorium, because FLIBE has proposed for many years to build a safe modular nuclear reactor in which you couldn't have a meltdown like you would with uranium. I know some of the uranium reactors also are becoming more meltdown proof the way that they're building them, but the whole benefit of using, and thorium is extremely abundant, by the way. It's much more abundant than uranium. So if they could crack that code with thorium and they could make it modular, meaning it doesn't take, you know, 20 years to build one and get it up and running, but you can put it, you know, throughout the country in many places. Thorium is so abundant. We've had a bunch of it as a waste product sitting in dumps for a long time. I would just excavate that without even having to mine it. I mean, there's a lot of positives to thorium if they can get it working. But I've been following FLIBE and been following that thorium discussion since I first wrote about it on Seeking Alpha, I don't know, maybe 7-8 years ago. And it just has not progressed at all. And the US administration is not putting money into thorium. They have chosen uranium for nuclear. So whether or not thorium could eventually be a threat, there's simply not enough development and backing for it right now. And it would take years for some sort of thorium end product to actually make it to market, unless China has a secret development plan, which they haven't shared.
Or we do. I mean, who knows what's going on in Area 51? But maybe that accounts for the drones that can move really fast.
Yes, right.
In all directions. I don't know. Any like I said, I don't like being in any one thing. I'm happy to be across a couple different plays.
Sure.
Could thorium be it? Sure, could.
But not in the short term, I don't think, based on what we know, at least what's public. Thorium is not going to solve the energy
There's
problem
no
anytime.
public knowledge, and there's not any fund flows I've seen to it. If there was
Right.
privately, let's say privately, like DARPA or the Chinese version, the Chinese military was doing it,
Mm-hmm.
we would see some rich person spending differently.
Yeah, exactly.
Right.
Or some sort of fund or something in a way they could facilitate, money flows.
Right. Yeah. I know we just don't. We still see a lot of oil. We still see a lot of coal. We still, I mean, we still see a lot of people buying into Tesla.
Mm-hmm.
And that, that's another discussion, but no, I think it'll be decades at least. And I have nothing against thorium, but I don't think it's ready yet. I don't think it'll be ready in 20 years. So
yeah.
And I'm not a thorium expert. So yeah.
I'm not either, but I agree with you. It takes a long time to get all that infrastructure into place, to get manufacturing into place, get permits and construction, and people to actually buy into it, change the culture a little bit, to get people, local municipalities to sign off on it. There's a long hill to climb for thorium. I think eventually it could be, like you said, in 20 years, it may be a solution. But right now, I agree with you. I don't see a super big competitor to uranium that can do what uranium does. And the only thing that may, in the US, the only thing, the oil and gas, we pumped up oil and gas so much we can't run any faster. And it's believed that we're running out of a lot of our oil and gas.
Yeah.
We're exporters now, but it may only be a few years left. The way fracking pulls it up very quickly and quickly depletes these fields, to the point that the only other fossil fuel we could use is coal. And it's so dirty that the environmentalists will go nuts if we start substituting a lot of coal. We're pumping here in Texas, 50% natural gas, something like 40% coal and nuclear. I forget what the mix is. But if they were to reverse course and go more coal, you would have the environmental groups go crazy. And so, I mean, look at the fight that Trump had to get coal production back up.
Right.
So I don't see even coal as being a big potential threat, because I just don't think that the environment, is political environment and cultural environment, is going to allow for coal to take hold.
No. I think the developing world will continue to use coal.
Mm-hmm.
But a funny coal story is actually there's a Formula One race in China, and they actually had to shut down all their coal plants for 3 days to get the air clear enough to be acceptable to be shown on TV. Because the air was so dirty, and all the visiting teams and stuff couldn't breathe, and the little race cars couldn't work because the gas engines in the cars couldn't, it was so dirty, wasn't enough oxygen, and there's too much contaminants, and like the race cars would break.
Yeah.
They actually had to stop things for a couple of days. So, the Chinese are tired of that. They want nuclear to work. And the other countries, let's say Africa or South America, they're going to buy coal for a little bit just so they can eat, just because they're so poor. But they're going to want nuclear too, and nuclear is going to be cheaper, especially when we get the small modular reactors, as you mentioned.
Yeah.
And as that comes online, that's going to be a very large tailwind, and that's a ways away, but it's going to be pretty big. I forget where it was.
Well, any last thoughts on uranium, gold, or silver before we sign off here, Steve? I think we had a really good discussion on all of it, on the Fed, value proposition for gold, silver, but especially uranium. Any last thoughts you want to leave the viewers with?
Oh, actually, yes. There was something. The only investment advice I would give is just that first 10% of every paycheck, I try to put it to charity, and that's been the best thing for me. It's encouraged my heart to be greedy when others are fearful, right? And to be fearful when others are greedy, and to be a responsible steward of capital.
Yes.
And I think the best investment you can make in yourself is probably to your financial education. But I think the best investment you can make in your world is to give charity. And there's a really good book by Randy Alcorn called The Treasure Principle. But all the best investors, you look at them and they did a lot for philanthropy. And I think there's a strong correlation there. So I'd encourage people to maybe look at helping the people that don't know what your viewers and yourself know about investing, about speculating, about, what the Fed's doing to us, right?
Yes.
And I think that's something so wonderful about our community is that we understand some money, but they've been very generous. And I just encourage other people to rotate some of the uranium and gold and silver attendees or profits into charity.
Yeah, I agree with you 100%. I think giving away to others is a way. Well, I mean, I'm a giver naturally, so I receive more from it than I give away. So I love doing it.
Yeah.
But when you focus that in certain areas, you say this is, like you said, you invest in, and not just from a monetary sense, but a giving sense. When you give in the world, you want to give in a way in which you want to see the world grow or manifest itself, right?
Yep.
And so I've tended to focus my giving into certain areas, which I hopefully manifest in something positive. That's one of the reasons we do the channel, by the way.
Yeah.
And so I think your philosophy fits right in with what we do here, and that's why I wanted to have you on. And
well, thank you.
Steve, thank you so much for the education. I know we talk almost every day about a lot of things, and I get as much education from you as I think I give, probably even more so. And I appreciate that. That's the benefit to me of the community is the back and forth.
And I think the network that we're building, I think it's so important, and just encourage everybody else to continue to build that.
That's right. We'll continue to grow it and reach out and help others as much as we can. Thank you so much, Steve, for coming on. We appreciate it.
Okay, bye.
All right, everybody, till next time, this is Gold Silver Pros.